This week in the markets, Trump cuts Japanese tariffs for a $550 billion buy-in. China's state hackers breach Microsoft and U.S. agencies. What does this mean for cybersecurity? Las Vegas Sands smashes Q2 with record profits at Marina Bay, a game changer for the industry. Talen Energy jumps 20% on a massive $3.5 billion power play. Investors are buzzing. Oklo and Vertiv are prototyping nuclear-cooled AI data centers. Innovation at its finest. And we break down how a short squeeze can send stocks parabolic, a must-know for traders. Watch through to the end to catch every twist shaking markets this week.
Hi, Deep Thinkers. I'm Gary Broad from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Rob Farron. He is back. He was on vacation last week. He is the CEO and founder of Flying V, our digital marketing partner. Rob, what exotic location were you traveling to last week?
Hey, Gary, thanks for having me, as always, on our regular scheduled time, other than last week, which was a great show, by the way, and appreciate Mark filling in on that show for me. But yeah, I was in Hawaii. I was fortunate enough to hit a few islands out there, specifically Lanai. Kind of not the most popular island, but an absolutely beautiful place. A little bit of downtime. I guess it's more or less public, but my wife and I are big life event coming in October. We're expecting our first child, which we're really excited about. So yeah, that's coming up here fast. But it was just a great opportunity for us to get away, enjoy each other's company, talk about changes coming, and really appreciated the time off. But back in the saddle now. I was definitely getting a little island fever. 10 days is enough for me. Hopefully I got a little bit of a tan. Gary was already giving me grief earlier today, more so about my hair, but I gave it right back to him. I'll let him decide if he wants to keep going. But
We'll
Gary, this week we've got the LVS, Las Vegas Sands, crushes earning issues. LVS, as you know, portfolio position for DKI for some time now. Gary will be talking about that later in the show. We're also talking about President Trump, of course, leveraging access to the U.S. market and what he's doing out and about. More news coming over the weekend even. A lot of stuff going on with President Trump. We're talking China and Microsoft and other U.S. agencies, Talen Energy, another DKI portfolio position, and then we'll close it off. Bunch of information about a short squeeze. What is it? What do you need to know? GameStop might ring a bell for some of you. Cash and Crow, our star intern, will make an appearance on the show today as well. Gary, let's get right into it. First thing, we're talking President Trump, as we've mentioned. He continues to leverage access to the United States market. Gary, thing number one, President Trump continues to leverage the U.S. market with Japan. Tell us what the conversation with Japan's prime minister led to.
All right, so we think we have a deal now between President Trump and Japan's prime minister, who the president unfortunately and hilariously referred to as Mr. Japan. Do not get mad at me. I wasn't the one who said that. But if you want more information on it, I would highly recommend a written piece on Substack by Weston Nakamura, who wrote a phenomenal analysis of what was happening in Japan, both politically and in terms of their trade relations. And I think it was really good analysis. Anyway, the deal that we have with Japan leads to lower tariffs on Japanese goods, as well as Japanese investments and purchase orders. Those tariffs are going to be lowered from where they had been, the 25 to 28% range, to 15%. The market liked that, saying, okay, wait, this is a lot worse than we had. It's not as bad as we had thought it might be. We thought things would be worse. So that was a plus. The Japanese auto industry was thrilled. A 15% tariff for them isn't great, but it does put them in a position where they can continue to profitably export to the United States. It's a huge market for them. One thing worth pointing out, there have been people who have said the United States is operating with a heavy hand here. I would just point out, Japan has had some pretty heavy tariffs for U.S. goods to come there, including on our automobiles. So, one thing that I would mention as well, people aren't seeing the whole picture. I'm currently in Eastern Europe. Just last week, I went from Krakow, Poland to Prague in the Czech Republic. And I'm here right now, and I talk to people, and they all ask me, and they say, "Yeah, well, we've got mixed feelings on President Trump. A lot of people here like him, but the ones who don't say, well, we don't like the whole tariff thing." And I say, "Okay, well, what about your tariffs against American goods?" And their response is, "Wait, what?" They don't know about it, right? So President Trump's trying to level the playing field, and I think it's important. Now, the part where there is some friction is the original announcement was that Japan would invest $550 billion, more than half a trillion dollars into the United States, creating a new US directed investment fund. And that is going to target industries like semiconductor manufacturing, energy infrastructure, rare earths, pharmaceuticals, and all sorts of other stuff. The original announcement was that the United States was going to keep most of the profits, maybe. Japan, now on their end, has committed to open its market wider to U.S. agriculture, energy, and defense products. That's a win, especially given the fact that Japan has a huge rice shortage and spiking rice prices. I think the rice prices have more than doubled. They may have tripled. So importing U.S. product is popular and necessary there, but there is some static. Japan is saying, wait, we never said you're going to have most of the profits from this investment fund. So that is currently being debated right now. We'll see where all of that shakes out.
Yeah, Gary. So obviously we know President Trump loves a deal. His books and all that in terms of how he structures deals. What's the economic rationale, though, behind what President Trump's doing, the way he's structuring these trade deals? What does that look like from an economic perspective?
So, Rob, that's a great question. And I actually think the wording that our interns used last week, which we emphasized, was terrific. And we were talking last week about the US-Indonesia trade deal and saying this looks like it's going to be the model for other countries or deals with other countries. And basically, the president is effectively leveraging the US market as a monetized asset. He's charging companies to access the gigantic US consumer market.
Yep.
And basically saying he's allowing them to pay not only to reduce tariffs, but to participate in trade with the United States. These two-way trade agreements are shifting towards transactional, results-oriented deals. The president is successfully targeting more reciprocal trade relationships. Again, I think this is the key thing. I understand why our trade partners are saying, wait a minute, we've been good trade partners. We don't like you raising tariffs on our products, but they're all conveniently ignoring the fact that many of our trade partners have had some pretty big tariffs against US goods. Their markets aren't fully open. President Trump is saying, no, we want reciprocal, trade relationships. And just to give you one quick sense of how out of balance we are, the trade, the amount of trade between the US and Japan is $230 billion with a $70 billion US deficit. That's enormous. So, they've closed their markets to us in many ways or charged a lot. The president is successfully saying, you know what, we're going to go to more reciprocal relationships. And if you want to access the US consumer, you're going to pay for it. And it's turning into I think a better place for the United States right now.
Yeah, I completely agree. I think you're exactly right. He's leveraging access. I've even seen it in certain instances where on the IT tech side, right, there's just advantages for even these companies outside of the United States to move infrastructure to IT support here, uptime, availability of websites that we're seeing, things like that, as well as just the reduction in overall problems that you're running into. So I think there's a lot of different plays here at play, or excuse me, strategies here at play that we're seeing play out. Gary, one thing I wanted to ask, because I know it happened over the weekend, and if you don't know anything or haven't looked into it, I believe something with the EU as well with President Trump.
Yeah.
Do you have just a quick tidbit on that or thought?
Yeah, so the quick answer is just like Indonesia, just like Japan, it's the same model. Right now, it looks like the deal is going to be struck at around 15% tariffs. It should be reciprocal. I think, all the details aren't out, but 15%, the market is breathing a sigh of relief on that. The market
Yeah.
was worried that it would be much worse. I think the thing with President Trump is he doesn't want to end international trade, but we've talked about this before. The United States has been outsourcing, it's selling off our manufacturing capacity for more than 40 years. That's not sustainable. We need to be able to make things in the United States. We just don't want to be in a position where we have no manufacturing capacity. So he's doing all he can to encourage companies to produce in the United States, to get foreign countries to buy American products. He's been honestly the best salesperson that we've had in the White House for US products and US companies. So that part's good. And the tariff levels are coming in much lower than a lot of the fiat economists feared. And I will just point out that Deep Knowledge Investing, we were early on this when people started talking about tariffs in March and April. We were early saying people are going hysterical, they're panicking. I just don't see it as reason to panic, and figured everything would be fine. We put that in writing and talked about that on this channel. So I think so far we've been right on this one.
Yeah. Yeah, no, definitely. Gary, moving to thing number 2, we're talking China. Yeah, question we asked in the 5 thing: what's the over/under number of times that we're going to write about China hacking the United States? Not just 25, I think, for the next forever. Cybersecurity, we've seen just a huge rise in vulnerabilities, malware attacks, the whole 9 yards across our portfolio of websites that we manage. But this is even bigger scale, Gary. Thing number 2: Chinese state-backed hack compromises Microsoft and other US agencies. Wow. Serious stuff here.
Yeah, so China has been conducting something they call unrestricted warfare against the United States for more than a quarter century. It's been more than 25 years that they've been attacking our country in a variety of ways. One of them has been in all kinds of cyber attacks. This month, a sophisticated cyber espionage campaign exploited zero-day vulnerabilities and on-premises Microsoft SharePoint servers to breach at least 400 organizations globally. For people who are wondering, a zero-day vulnerability means that the problem presents itself on the day that you discover it. There's no time to prepare. The organizations that were affected included U.S. federal agencies like the Department of Homeland Security, Department of Energy, and the Nuclear Security Administration, if that gives you a sense of why this matters. They used all kinds of sophisticated techniques. Microsoft and CISA, they've issued urgent patches. They've given all kinds of recommendations. But the attack here underscores the growing scale of Chinese cyber attacks that are now targeting hundreds of entities with ranged offenses, and the persistent vulnerability of legacy on-premise infrastructure. They're looking for every vulnerability they can find. Whether we want to acknowledge it or not, China has declared war on the United States. They just call it unrestricted warfare. They haven't fired any missiles yet, but they're finding ways to cause pain and problems here.
Yeah. So, Gary, I know in the past, too, we saw a situation with the solar grid, solar panel infrastructure, China inserting, I don't know if it was bugs or scripts or whatever for them to access, and then from there destabilize the grid. I mean, is that a similar comparison to what we're seeing in 2025 here, or something completely different?
No, that's exactly what's happening here, Rob. In the United States, we buy almost all of our solar equipment from China. And we talked about this earlier this year in a prior version of the 5 things, that what the Chinese were doing is they were putting hidden vulnerabilities in the inverters that are used with solar equipment that would allow the Chinese government to not only monitor our grid, but also to damage it. And so they literally are putting in the products that we're buying from them. People say, hey, wait, we shouldn't have tariffs on China. The real question is, should we be buying from them? Because they're putting spyware and other kinds of equipment in the things that they're selling us that would damage our grid. And you say, okay, wait, does that matter? Yeah, it absolutely matters. Try to imagine that you're running a hospital and they damage a grid and your hospital doesn't have power. And yeah, somebody could say, well, the hospitals have backup power. Yeah, they have generators that'll go for a while, but do we really want to be without electricity because the Chinese government decides that? Listen, we have had over the last few decades a huge amount of deflation as a result of China selling us a lot of cheap stuff. Here's the question that I want to ask. Should we be examining if cheaper things are worth the risk? What do you guys think? Put it in the comments. I'm curious to know. Like, there's no question we get a better price buying from China, but is it worth having these kinds of vulnerabilities and this kind of risk?
Yeah, very interesting question that we could debate forever, and a lot of different angles that you can come at that one. This is this week's version of the 5 things. We're about to get into the meat of the version. The LVS Las Vegas Sands crushes earnings issue, DKI portfolio position. We're really excited to talk about that here in a minute. Please head over to our website, deepknowledgeinvesting.com. You can sign up for a free subscription, get added to our weekly newsletter that goes out, as well as you'll get delivery of premium content that will be gated, but you can consider a premium subscription. Here in YouTube, we host this show every Tuesday, I believe. Gary, correct me if I'm wrong. I was on vacation for a week. 6 a.m. Pacific, 9 a.m. Eastern, 6 a.m. Pacific. The 5 things goes out every Tuesday, same time, same place on YouTube. Gary, did I get that right?
Yeah, you nailed it.
Okay, good. Okay. Gary, moving on to Las Vegas Sands. Thing number 3, big note was Marina Bay Sands profitably sets new records. The Londoner opened up from their renovation. Gary, let's get right into it. Thing number 3, LVS crushes earnings expectations. Great stuff.
Yeah, all right, Rob. So Las Vegas Sands, tickers LVS, they had a fantastic second quarter. This is something I told DKI premium subscribers to expect earlier in the month. It's been a long-term position for us. In the last quarter, that stock is up. Let me see. Let's see. We were just above 30. It's at 53 right now. So, that's more than $20 profit on a $30 base. Yeah, it's up somewhere between close to 70% in the last 3 months. That's worked out really well for us. Let's talk about what happened in the quarter and why. Revenue of $3.2 billion was up 15%. Crushed analyst estimates at $2.8 billion. Adjusted property EBITDA was up 24%. Here's the big one. Adjusted earnings per share of 79 cents was above analyst expectations of 53 and last year's 55 cents. Sands management has always been shareholder friendly. In the quarter, in addition to maintaining the dividend, they bought back another $800 million of stock at prices well below the current market price. I think they paid something like 25, 30% discount to the current market price. The Marina Bay Sands in Singapore, that has more than half the market in the giant Singapore market, they did a massive $768 million in EBITDA. That is a huge record. Now, some of you might say, wait a minute, you had above expected hold. That's just a fancy finance way of saying that the company got lucky at the gambling tables. Believe it or not, a casino can get lucky or unlucky just like we can. So they got $107 million lucky and above expected hold. Okay, so let's adjust for that. The adjusted for hold EBITDA number was $661 million. Guess what? Even that was a new record. So in Macau, the newly renovated Londoner doubled its EBITDA despite not being fully open for 1/3 of the quarter. That's pretty amazing. And then in something that some consider bad news, but I consider good news, Sands results, this blowout quarter, happened despite a few Macau properties underperforming. Management addressed it directly on the call. They said, hey, look, we know these few properties are not doing well. We've already implemented a new pricing plan to regain market share. We're already seeing results from it. So basically, they did all of this with a small part of the portfolio lagging. And what they said on the call is that lagging part of the portfolio is already showing improvement.
Yeah, Gary, I'm going to ask a question that I already know the answer to, which I know generally is a no-no, but I'm asking it for emphasis, right? Because I think this really highlights the value of deep knowledge investing and quality of the research, understanding of what's going on with the positions and why, and more importantly, identifying ones where the market is just missing something. So that's my disclaimer. My question: why was the stock so low earlier this year? What had people worried, or what did DKI see, which here's the value, that nobody else saw?
Yeah, so that is the right question, Rob. And it's a bunch of stuff that we knew we shouldn't be worried about. Early on, people were worried about Macau visitation, but that's turned around. It's quickly approaching pre pandemic levels. Then they worried that China would retaliate against US based concessionaires. Those are companies like Las Vegas and Wynn. The concern was, hey, President Trump initiated tariffs. So China is going to, or they were worried that China would retaliate against Sands and Wynn. The truth is that those two companies have been excellent corporate citizens. They've created tons of jobs in Macau. Every time the government has asked them for adjustments or cooperation, they've provided it. And China, they've never hinted they'd take aim at these good corporate citizens. And the truth is, beyond that, any action against US companies would end foreign investment in China. That's something the country desperately needs. Confiscating the foreign owned assets in your country is a guarantee no one will ever invest there again. China doesn't want to have that problem. And then the final thing was people were worried that results at Las Vegas Sands were falling. And that was true, but it was due to temporary and now almost completed renovations. Basically, casinos are buildings that are used really hard. People go, they want to relax, they party there, and those hotels need to be renovated. So yeah, the results were down previously, and the reason for that is because they had a bunch of rooms out of service. Guess what? Those rooms are back in service, and we saw what happened with the results. So it was people getting worried about a lot of either short-term things or things that just don't matter and didn't happen.
Yeah, great breakdown there, Gary. And I think, again, just highlights overall value of the way you're looking at the market, regardless, good, bad, indifferent, identifying those unique opportunities to capitalize on. And then one more critical thing as well. What are we doing? And this is not a question now, this is a statement. What are we doing with the stock is just as critical as this run up to the level that it's currently at. So one of the unique things that DKI premium subscribers receive is it's not only important to know when to buy, it's more important to know when to sell as well. You'll have to subscribe to find out what we're doing with LVS moving forward. Gary, moving on to another DKI portfolio position, Talen Energy. We're talking about their surge again. So I love this few quick wins, small wins, leading to bigger wins, and so forth. Really excited for DKI subscribers. You're talking about electric rates will rise due to people using ChatGPT to make funny photos. Gary, what does that mean? Thing number 4, Talen Energy surges on $3.5 billion power plant play and a blowout auction. My goodness, I need a breath.
Yeah, there's a lot going on there. So Talen Energy has been a DKI position for a little over a year. And that time the stock has more than tripled. I think our entry point was either 115 or 118, something like that.
Yep.
We want to give credit. Enrique Abeda was the one who introduced the idea to us. If you look at Deep Knowledge Investing's YouTube channel from about a year ago, you can see we've got me and Enrique talking about the stock. Enrique laying out his thesis on the company. Good for him. Congratulations. Thank you, Enrique. Tons of credit there. And certainly DKI subscribers are happy having, this on our position sheets more than tripling in about a year. So a week ago, Talen Energy stock rose by 24% in one day as the company announced a plan to buy 2 natural gas power plants for this $3.5 billion. Not coincidentally, these plants are both located in the nearby Pennsylvania, New Jersey, Maryland interconnection market, where a day earlier, the White House announced plans to make Pittsburgh an AI hub with huge investments made in new data centers. We remind you that each individual data center can use as much electricity as an entire city and requires constant uptime. You can't use solar or wind for these kinds of projects. You either need natural gas or nuclear. Talen has both. Even small power outages can cause problems. So that's what's going on there. And the power demands of these hyperscalers have created a shortage of electricity supply in the market. Talen's benefiting from that.
Yeah. So Gary, my question is, and we hinted at it in the beginning segment, is if the hyperscalers that are building these data centers, they're bidding, as I understand it, against these homeowners for this capacity, I gotta imagine that's just creating for the consumer increase in electricity rates and pricing on their electric bill.
It's gotten insane, Rob. So after rising 24% on the news of this $3.5 billion of acquisitions last Wednesday, Talen stock rose another 8% on news that this same Pennsylvania, New Jersey, Maryland interconnection market is out of capacity. They don't have enough power. And again, each of these AI data centers use enormous amounts of electricity. They've taken up all the excess supply. As a result, they had an auction where rates skyrocketed, just like they did a year or two ago. So the electric rates in that market have gone up an enormous amount in the last few years. I mean, we've talked before about the CPI being inaccurate. This isn't even close. These are gigantic changes. And the thing is, the change in rates in that auction benefits Talen. So here's the thing. Yeah, people's summer air conditioning bills are going to be huge, absolutely enormous. And, you talked before, we can blame everyone using Chat GPT to, make funny images or, whatever it is. But that's going to be life now. So the good news here is that you could have hedged your electric bill by owning Talon, and that's been a huge plus for DKI subscribers. Where again, we've made more than triple our money in just over a year. It's also a huge positive for DKI's large uranium position. And so we have been long huge amounts of energy. And if you want to understand why, in one sense, I want everybody to think over the last few years about how many times you've heard people complain about higher power prices, higher electric bills, higher gas prices. Hey, guess what? Now you know why we own energy, right? Like we might as well sell it to ourselves and grab the profits. That's really what it is.
Yeah. Hey,
so, right. When my electric bill goes up, I mean, I don't like paying it. I don't like writing the check, but I'm not unhappy.
Yeah, in a very roundabout way. It's just whoop right back in there.
Exactly.
Chat
right.
GPT away, folks. Chat GPT away. If you have a problem, I know the green crowd. Leave it in the comments. Leave it in the comments. Solutions, questions, no problem. Give us a thumbs down. We'd love that too.
Yeah, and by the way, don't blame us. We are not the people who created ChatGPT. We just understand the financial implications of it.
I was at a AI panel, which was Neil Sahota. He's actually counsel to the UN on AI strategy, policy, etc. Very impressive gentleman. It's part of an organization called Seed Consulting Group that I was a part of in the past. So shout out to them. But Neil got up there, and one of the things he said was, okay, you want to be green. You're going to buy a electric vehicle. Well, are you planning to trade the electric vehicle in every 3 years like you do with your gas-powered vehicle, right? Yeah. And so it was just funny perspective, right? Yeah, I want to help the environment, climate change because I'm going to drive an electric vehicle, but I also want a new car every 4 or 5 years as well.
I got to tell you, Rob, one of the most cynical things that the companies that market to the environmental movement has done is
I know
instead of convincing people that being environmentally conscious means consuming less, they've turned environmentalism into a consumer good. If you buy our products, you're a good person. If you buy our products, you care about the planet. They've made consumption into basically a mark of good environmental stewardship, which if you think about it is kind of crazy.
Yeah, no doubt. And then Neil said, okay, well, how about this? I stopped shaving with water. And they go, well, Neil, you're not going to solve water issues by not shaving with water, right? He goes, well, yeah, but now my brother doesn't shave with water. And he told his friend, and he doesn't shave with water. So what happens now when you have a million of those people actually doing something on a day by day basis? So anyways, we could go on and on. We got to keep this moving. Thank you so much for watching. This is the LVS Crushes earnings issue. I forgot to mention it in the beginning. We actually have 6 things. So bonus session, extra value, always coming through, Gary, for the DKI deep thinkers and subscribers. Again, head to our website, deepknowledgeinvesting.com. Please like, subscribe, dislike, tell us why. Make fun of Gary's hair, my hair, I guess. Whoever's hair you want to make fun of, we'll take We'll take all of it. And then we'd love if you would consider subscribing. $100 a month gets you access to the entire site unlocked for everything you could possibly want. Gary, moving to Oklo and Vertiv, if I said that correctly, I believe I did. Innovative potential solution we're talking about. And again, energy shortfall is what this is focused around. Gary, thing number 5 before our educational thing, Oklo and Vertiv partner on nuclear-powered data centers.
You know, I got a funny thought for you, Rob. I actually don't know if you pronounced it right or not because I read everything. I don't watch CNBC. I never hear these things pronounced. Anyway, these two companies, they basically announced a deal to work together. We're going to see what happens. Oklo is an advanced nuclear technology company. They develop small modular nuclear reactors. Longtime fans of the channel know how I feel about that. We're super positive on the SMRs. And Vertiv, I'm actually not sure how it's pronounced. I don't know. Somebody write it in the comments. Let me know. They are a global provider of critical power and cooling infrastructure for data centers. We were just talking about all the energy use in these data centers. Well, guess what? That creates a huge amount of heat. And without constant cooling, those data centers would overheat, the chips would melt down, the whole thing would fall apart. Anyway, what they've done is they announced a new collaboration to co-develop integrated power and cooling systems for hyperscale and co-location data centers in the United States using electricity and steam from Oklo's on-nuclear power plants. Okay, basically, all this means is that Oklo has nuclear power plants. Those plants generate heat. Heat can be used to generate electricity, and that's going to be used to run Vertiv's cooling equipment. The partnership aims to make data centers more energy efficient while delivering reliable, clean power for energy-hungry AI and high-performance computer needs. So does it work yet? We're not sure. A pilot is planned at Oklo's first Aurora microreactor. The companies are going to develop reference designs for future nuclear-powered data centers. Look, it's not done yet, but I think these kinds of creative solutions are really good. And by the way, for the environmentalists in the crowd, we're going to remind you yet again that nuclear power does not use, there's no carbon emissions from that. It's basically the most environmentally friendly energy we're going to get here. And with, always uptime, it'll work for these AI data centers.
Yeah, very, very interesting, Gary. Sounds like they're ready to go. I mean, I'm assuming this makes us even more bullish, or what does this do to DKI's thesis on nuclear power, if anything?
More bullish, definitely. I mean, look, we've owned uranium because we've been positive about nuclear power for years. That has been a hugely profitable position for us, for DKI subscribers. I think these small nuclear reactors, these SMRs, small modular reactors, are going to be the future. We're certainly loaded up for that. They can be produced very quickly and literally in something the size of a shipping container you can put in your company's parking lot. They can power an entire data center. It's an incredible option. They can be built quickly as well, 2 to 5 years or even faster once the plans are done. So this is a signal on how advanced nuclear is moving from concept to practical infrastructure, and using that as well to help cool the AI data centers. I think it's a creative, clever design. We'll see what happens. If the project succeeds, it could revolutionize data center design and give both companies an edge. But the thing we're going to caution you about, there are still regulatory risks and execution risks. If successful, it's a positive for our uranium position. If not, we still want to own uranium anyway. I'm hoping this thing will work, but we'll see. It's going to take a little time before we know for sure.
Yep. Yeah, no doubt, Gary. But again, extremely excited about nuclear position, and for a lot of different reasons, especially stuff I'm seeing boots on the ground, ChatGPT, AI, that whole evolution as well. And now moving to our 6th and final thing, we're getting into our educational topic now. And we have, again, intern Cash and Crow joining us on the show. We're talking about short squeezes. What's a short squeeze? And yes, I'm sure all of you GameStop, Roaring Kitty fans, GME fans out there will love this one. So, Gary, turning it over to you for our educational thing on short squeezes.
All right, excited to introduce one of our star interns, Cashin Crow from the University of Tennessee. Cashin, why don't you tell us about a short squeeze? What is it?
Yeah, thanks for having me. So, a short squeeze is when a jump in a stock's price forces a lot of short sellers, like hedge funds and institutional investors, to sell their short positions on to sell their short positions to cover those losses before they become too substantial, and in turn, this makes the stock's price jump up even higher, um, ultimately making those losses even larger for those still holding those short positions. So, when someone in a hedge fund or an institutional investor wants to make a short position, they're going to borrow shares from somebody to sell and buy back with hopes for buying it back at a lower price to make that profit. So when they're doing this and they're ending up losing money before it gets too long, they're going to go ahead and buy back that share um, after it's already gone up in price, and this will cause it to sometimes excel in price, sometimes 3, 4, or 5 times higher than it originally was. So, that most notable example, like Rob mentioned, is GameStop. So about 4 years ago, in January of 2021, this was when a lot of hedge funds and institutional investors saw GameStop, their brick and mortar business model for video games, that was transforming into mostly online sales. So they really saw it as a declining business model and a textbook company to short. So I think at one point, over 100% of the shares were a short position, which was more than was even in the float entirely. So it was a heavily shorted stock. And then you had, groups like retail traders and people in groups like Wall Street Bets that saw they wanted to go against these institutional traders and show that they had the ability to kind of flip the switch. So they continued to buy and hold that stock. And eventually, these large funds started to have to sell their position. And, like we said, the price went even higher. And this caused, many companies like Melvin Capital, and I think there's some other notable names, to basically lose half of their fund, if not have to shut their doors entirely.
Okay, Cashin, great description. I'm going to add two things to that. One is this is something that George Soros used to call reflexivity. So the reason that these traders have to cover their short positions, that they have to buy back the shares they've borrowed, is they get something called a margin call. Basically, the risk that they have exceeds their capital. And so their prime broker, their bank, basically calls and they say, we need you to take risk off the table. The only thing they can do is start to buy back their short positions. And the crazy thing about it is, in many of these cases, GameStop included, the price spiked and then came right back down. But when the price spikes up, these traders have to cover their positions immediately because they get margin calls. And that in turn makes the stock go higher, which causes more margin calls. And so literally the act of covering a stock causes other people to have to cover. And that's why these things get out of control. Once all of this covering takes place, the stocks tend to crash. And that brings me to my second point. The second point here is all of this happens with no regard to fundamentals. One thing I think is really interesting is, it was Roaring Kitty who caused the GameStop mania. It really started the whole meme stock craze. But I actually went back and I watched one of his videos from 2020, and it was on fundamentals, and it was on the things that GameStop was going to do to improve their business and raise revenue, except that didn't happen. The revenue, I think, was down by something like 60% over the following few years. And so his fundamental analysis was wrong, but he was really good at driving retail investors to go buy the stock at higher and higher prices. So the point in all this is these short squeezes don't reflect company value. There's no change in company fundamentals. It is literally just the market going crazy at a particular time and people not being in a great position for risk control. All right, so that's what we have on short squeezes. We hope that makes sense. For those of you who have questions about it or want to know more about shorting a stock, just put your questions in the comments and we'll get to it next week. Rob, why don't you wrap it up for us?
Yeah, thanks, Gary. And Cashin, thanks so much for hitting that sixth and final thing, giving you extra value, 20% more on today's version of the 5 things, which we covered a lot of great topics: LVS, We've got more exciting news about DKI portfolio positions coming in the pipeline, and we're really excited about what's happening. Gary, appreciate you giving me these closing thoughts. Actually asked for these earlier as we were going through just pre-show notes, but yeah, I really just wanted to say really thankful for everyone that has contributed to our community. I know right now we're small and mighty, but growing. But for me, it's all about quality over quantity as well. So I know sometimes people get caught up in these big vanity metrics and the numbers and this, that. But today, went through some tough things within our organization just from a change and evolution standpoint. And it had to do with people, right? And so it was just a reminder to me at the end of the day, people are the most important, critical things we have in our lives. Treat them with respect, appreciate them, encourage them, be thankful for them. It ended on good terms, right? But yeah, still tough having to make those difficult decisions. So, but moving forward, always keep that forward-thinking mentality. And I'm really excited to see where this community goes. Gary, my turn to thank you for the time you put into this show. I know there's a million other things you could be doing, but you spend the time each and every week to teach people like me and cash in as well. And, hopefully we do a good job of passing that down as we can as well. Because obviously the stuff we talk about on this show is very important. And we're going through a very transformative period that especially is affecting young people, especially like Cashin. And I just think the time and energy that you put into this, I want to thank you for that, and Cashin especially as well for your time also. Gary, anything to close on that? But yeah, that was all I had. And I guess we'll see everybody next week. Or Gary, anything you might want to add?
Yeah, thanks, Rob. I appreciate it. Thanks for the kind words there. Certainly the educational part of the 5 things is something that we enjoy. I also think your comments on staying calm, always looking forward and valuing the people around you is good trading advice for those of you who are deep thinkers and investors, right? Value the people in your life, stay calm, stick to your investment philosophy, and don't get shaken out of positions by short-term volatility. I think that's really good advice along the way. Separately from all of that, Rob, I always appreciate everything you do for the 5 things and everything your firm Flying V has done for us. And a special round of applause for our star interns, Cashin Crow, Samak Jain, and Gideon Rodham. The 3 of them do a huge amount of the heavy lifting for these episodes. They do writing, they do research, they do image generation. So, it's my name on the door, but these young people really do a terrific job. Round of applause, Cashin, thanks. I know how much work you put into this, and it's great to see the way you've succeeded. Always good. And then final word, as always, for those of you who have taken the time to watch this, we appreciate it. We know your time is valuable. If you want to give us a like and subscribe, we'd appreciate it. But hey, do what you want. We're not the boss of you. We'll see you next week.
Thanks, everybody. Well done. Cashin as well. Gary, thank you. Goodbye, everybody.